Welcome back to the lecture on the digital euro of commercial banks. In this chapter, we're going to talk about the custody of a digital euro and what that actually means. Now, when you look at tokens, and this obviously includes digital euros, then tokens need a custody solution, pretty much like a car would need wheels. The car in itself is valuable even without the wheels. It can still be expensive. However, the use of the car is very limited, right? You typically want a car to bring you from A to B, and when you walk into a car dealership and they would sell you the car without wheels, then you would be quite surprised. You would say, yeah, it's a nice car, but why don't you put some wheels on it so I can take the keys and drive away? Now, when we look at tokens, you can own tokens without a proper custody solution. We will see that owning a token essentially means having a certain digital key, but without the custody, the use is relatively limited. You cannot send it anywhere, you cannot trade it, potentially you can't even look up the value or the amount of tokens that you hold, so you need some form of custody. And in the case of the digital euro, that's the same. You will need to have something like a wallet where you can store your digital euros in order to be able to interact with them. When we look at the development in the market of digital wallets, we see that it's actually pretty fast. There's a study by Deutsche Bank which shows that right now there's approximately 50 million users worldwide who have some form of a digital asset wallet. And the speed of adoption of these wallets is somewhat comparable to the adoption of the internet in its early years. And over the next 10 years, there will be approximately 5 times more wallets and potentially even more if the current growth rates are maintained. And all of this development is also supported by regulation. In Germany, we're in fact in a pretty progressive and good state. The German legislator has introduced new legislation around the provision of digital asset custody services, and this would also include digital euros. And so, from the perspective of a commercial bank, you know that you are in a regulated environment, which means that you have regulatory certainty. And this is something that's obviously important in the context of digital assets and in general of financial services. And so on the one hand, we see a market which is developing and growing fast. And on the other hand, we have regulatory clarity. So this is actually a very good starting point of digital asset business in general. And a custody solution is typically the first step into getting into a digital asset business. Because again, without a custody solution, users and institutions can't really interact with digital assets, being these digital euros or being these tokenized securities. Now, what does custody actually mean? When you look at tokenized assets, then you would typically have something that's called a public address or a public key. And you can think of this as your IBAN from your bank account. This is an account number that you can share with third parties. And if they want to send you tokens, digital euros, then you would need to share this address with them. And then to each public key, there's a private key, which allows you to spend the balance that you have on that address. Now, there is plenty of wallets out there for retail users to do self-custody, where they manage this private key in a software, like in a mobile app. However, this is something where I don't believe if we get to a mass adoption of digital securities and digital euro, a solution which is really scalable. What I believe is that we will have custodians, which are the banks that are already operating today, and they will, just like they offer a securities account to their customers, they will also offer a wallet account where their users can, or their customers can store digital assets. And so when the bank takes over this function for their customers, they ultimately safekeep the private keys of these users. So when a bank wants to provide custody services, they need to have a certain set of technologies that allows them to store these keys in a highly secure way. So security is obviously the key aspect here. But then at the same time, security is not the only aspect. Convenience is another one. It needs to be done in a way that a withdrawal doesn't take several days, but you can ideally, as a customer, withdraw immediately. And compliance is an important aspect. We have just said that providing custody services of digital assets for third parties is regulated, which means that there are also certain technological requirements to the custodians that need to be met by commercial banks. And so all of these aspects, security, convenience, and compliance, need to be met. And there's plenty of technologies out there how this can be done. The traditional way would be to use so-called HSMs, hardware security modules. However, in the cryptography space in the last 2 to 3 years, there has been a significant development, and a technology called multi-party computation has been developed, which allows for the storage of keys in a purely software-based way, which is both secure and convenient, and allows to split this private key into multiple so-called shares, which removes a single point of failure. Now, I know this is a highly technical topic and we don't dive into all of its details. The key takeaway is, again, you need to have a solution that is secure, that is convenient, and that is compliant. And the two options that you will typically have is the multi-party computation and the HSM approach. And from our experience in the context of banks, the MPC approach is something that is preferable because in all three aspects, security, convenience, and compliance, it is better than HSM. At Bitbond, we also deliver these solutions, of course. So we have put in place with other banks custody solutions that are based on this MPC technology. When you look at compliance, approval rules are highly important. So it's not just to satisfy technological requirements of the regulator, but you also need to make sure that you have internal approval policies in order to minimize risk and in order to still maintain a good level of convenience. So all of this is necessary also when you want to issue a digital euro, because again, you need to have a place where you can store it, and therefore a custody solution is key. But the good thing is, when you want to use a digital euro, you will typically not use it as a standalone technology, not as a standalone token, but you will most of the time use it in the context of other transactions as a payment method, such as securities settlement. And so you will need a custody solution anyway. And the good thing is, when you use the same protocol for tokenization and for the issuance of a digital euro, then you can as well use the same custody technology. Thanks for watching, and I'm looking forward to seeing you in the next chapter.